After being one of the worst performing currencies of 2022, the pound has staged an impressive recovery against the dollar, rising 15% from the depths of last September's crisis. After years of decline, markets are now more optimistic. The pound will continue to strengthen. But why is the pound rising when many in the UK face a cost of living crisis? And is the pound's apparent recovery really as good as it looks? If we look at the value of a pound to euro, we can see a long slide and the depreciation of the past 20 years. Let's try to understand why the pound is doing better and whether it will last. The first reason for the recovery of a pound is that it simply performed incredibly badly last year. We had the weakest economic growth, costs of Brexit, high inflation. All of this made the UK an unattractive place for investors. And then on top of that, there was a self-inflicted crisis of the Truss Kwarteng budget, which made the UK look like a badly managed emerging economy. The reckless budget sent interest rates soaring, investors fleeing, and the pound tumbling to record lows. However, the reversal of a budget and the new Prime Minister, Rishi Sunak, caused some stability to return. So 2022 was a merry-go-round with 4 different chancellors and policy U-turns. And by contrast, 2023 has been relatively calm, which is very helpful for sterling. The second reason is that in 2023, the UK economy has done better than many predicted. At the start of the year, the IMF and others were predicting a mild recession for the UK, and they predicted the UK would be one of the worst performing economies in the world. However, the UK has so far exceeded these admittedly dismal forecasts. Most of the data surprises are to the upside, and people having to revisit their excessive pessimism. This is not to say the UK economy is growing well. Economic growth in the past 12 months is just 0.6%, lagging behind the US and European Union. So part of the reason for sterling's recovery is simply that it is exceeding its very dismal expectations. Currency movements can sometimes be confusing, with short-term movements often influenced by whether they do better or worse than market expectations. The third reason for the recovery of sterling is rather less encouraging. And this is because the UK's inflation has also exceeded expectations, making it one of the highest in the OECD. And although the Bank of England hope it will fall, it is now considerably higher than the US and European Union. Now we might think that bad news on inflation would be bad for sterling, but in the short term, higher inflation means the UK is likely to raise interest rates more than expected. Last year, the Bank of England were the most dovish of central banks. This means that they were hoping to keep interest rates low with the hope that inflation would fall on its own accord. But this hope of the bank that inflation would fall away has frequently been wrong or overly optimistic. And since that hasn't happened, they are having to raise interest rates by more than markets expected. And in the short term, it's this relative interest rates that are key for determining exchange rates. Higher UK rates will attract savings and hot money flows, pushing up the value of a pound. Fourthly, a lot of the pound's recovery reflects the dollar's weakness this year. Post-pandemic, the dollar was strong, as it had the fastest economic growth. But now the US is at a different stage of the economic cycle, with US inflation falling to under 5%, compared to nearly double in the UK. And so it looks like the US interest rate won't rise further. And also, if we look at the sterling trade-weighted index, the recovery is hardly noticeable at all. The fifth reason for the strength of the pound is good news on falling gas and oil prices, which particularly helps the UK as a net importer of energy. As a result of all this, banks such as NatWest and Goldman Sachs have become more optimistic on the pound, stating it could rise to $1.3 by the end of the year. They point to short-term factors such as falling prices and also the more hawkish tone from the Bank of England, with UK rates rising more than expected. So this is fine for 2023, but what about the longer-term prospects of pound sterling? In the short term, high inflation and the pressure to raise interest rates have boosted sterling. But in the long term, this higher inflation will reduce the UK's competitiveness, and it tends to reduce the value of sterling. It is concerning that although all countries in the world have been affected by the economic shocks of the past 2 years, Ukraine war, rising oil prices, even so, UK inflation has often been higher than our competitors. We're more vulnerable to inflation, and this is the key factor for determining long-run exchange rates. This is a significant depreciation against the euro and reflects higher inflation and lower productivity growth of the past 20 years. And it's not clear that anything has changed to alter this. In the long term, the value of the pound will be determined by factors such as competitiveness and the attractiveness of the economy to investors. But the UK is still adjusting to the Brexit shock, with trade in goods severely affected by the new trade barriers, with more barriers still expected to arrive. Also, although the UK economy has narrowly avoided a recession, which is encouraging, many UK consumers may be left scratching their heads thinking it doesn't feel like that to them. High inflation has eroded the real value of wages. And in the current climate, the rise in interest rates is going to be quite significant, because with weak household income, the interest rate increases could still hit the UK economy quite hard as homeowners will see rising mortgage costs. And also there's a delay as people have to remortgage fixed deals, will do it increasingly over the coming months. And they could easily get a real shock when they see that their mortgage bills have risen £200, £300 a month. Also, whilst unexpectedly strong recovery has boosted sterling this year, the flip side is that any unexpected slowdown in growth or bad news would again hit the value of a pound, as interest rates would be more likely to be lower. So overall, the recovery of a pound shouldn't hide the underlying weakness in the UK economy. Business investment has still not recovered from its post-Brexit slump, which bodes ill for long-term growth. Also, despite the pound's weakness, the UK is still running a large current account deficit. We're importing more goods than exporting. In the long term, it is not clear that the UK has done enough to halt the long-term decline in the value of the currency. You can see this in historical context. The pound has been sliding against the dollar for the past 120 years. And Brexit and the unusual political instability the UK has seen recently have created a new range of challenges for the UK economy. Traditionally, the UK was very open, relying on trade to boost growth. But Brexit has led to a decline in trade openness. And yet, at the same time, there's little signs of economic growth elsewhere in the economy. And this is a really worrying thing for the UK economy. When, if ever, will we see a renewed growth in productivity, the driving force for higher growth and improved competitiveness in the long term? On a more optimistic note, there are signs that exports of services are doing better than expected, possibly due to services being less affected by leaving the single market. Also, the fact that the UK avoided recession despite all the bad news is somewhat encouraging and a sign that economies can be very resilient even with all these negative headwinds. And also, finally, maybe the worst of the Brexit political instability has passed and we could look to a more stable future. But that's really a fairly small lining on a pretty dark cloud. There's no reason to suggest that the long-term gradual weakness of sterling has going to be reversed. In the short term, there's been a bounce back from the craziness of last year, but there's no reason to feel that in the long term we're suddenly going to get a very strong sterling. So coming months, there may be a slight more recovery against the dollar, but over time, the best bet would be the past trend in a depreciating sterling to continue. Anyway, if you've enjoyed this video, you'll also like this one about all the problems facing the UK economy, and in particular, why public services are deteriorating in quality, despite the very high tax burden as a share of GDP.